Hey, today we're talking about private money. Now, we haven't heard a lot about private money during the pandemic, right? All we hear about is conventional 2% interest rates. So I thought it'd be interesting to check in with some of my investors and see what's going on. And it's very interesting, actually. Private money, like all lending sectors of the business, is alive and well during COVID-19. Now, what is private money? If you don't know, private money is basically a loan from an individual or an organization made to another individual or an organization. Whereas in our conventional lending world, there's usually a financing institution or a bank making a real estate loan to an individual typically. So private money has a lot less red tape and regulation. There is more risk for both the borrower and the lender. What's interesting though is that investors, there's a lot of investors out there wanting to lend on private money loans right now because they're seeing the stock market as being a little bit frothy, perhaps overinflated, and they can get a nice 7 to 9% return on these private money loans. So it is a very thriving business on the investor side. And I do think moving forward, we're going to see a lot more opportunity for the general public to take advantage of private money loans with foreclosures possibly coming with different odd properties, etc., and fix and flips and things like that. So definitely something to keep an eye out for. I'm Garrick Wardmuller. Please like, subscribe, and I'm going to share some of the financing options you can take advantage of with private money. Thanks for watching. Commercial loans up to 70% of the fair market value, as well as odd properties, churches, religious buildings, gas stations, vacant buildings, etc. Fix and flip rehab loans up to 85% of the purchase price plus 100% of the rehab construction. Construction loans up to 100% of the construction loan amounts, not to be above 65% of finished value. And refinance for business purchases, cash out refinances up to 70% of the loan to value. That's private money. You're watching the Digital 411. Thanks for subscribing, liking, and sharing.